Good morning, good evening, good afternoon, whenever you are watching this week's video. Baby, we semi back? Nah, we back. We're back to doing the weekly videos. Woo! What a time it has been. I definitely owe y'all this information. Why do I owe y'all this information? Because I told y'all I was gonna get it to y'all some weeks ago, and we need to figure out this series and finalize it on these statutes. Why? Because this is the statute that y'all care about the most. I promise. It is truly the statute that you care about the most and want to know, well, how did this work? What can I do? And when does it apply? That pause was supposed to be dramatic. Y'all know the girl is full of drama. She's doing some stuff. She got some sleep. She done ate some breakfast. She ate some snacks. Y'all, during tax season, it was hard, especially that last week and a half. Long hours, needed naps, maybe rested for 5 hours in some days and got back up and was back at it at 6 o'clock in the morning till midnight. Wouldn't recommend it. Definitely would not recommend it. But I promise you, this is the video you want to pay attention to. Let's jump into it. All right. Time you can claim a credit or a refund. I want you to understand how much time, this is the statute, right? How much time do you have to actually claim a refund or a credit when it comes to y'all taxes? Now, there's exceptions, and y'all know there's always exceptions to every rule, but we need to know what is the standard. All right, here it is. It's called the Refund Statute Expiration Date, the RSED. We talked about the ASED, right, which was our assessment when they could assess tax. We talked about the CSED, which was when they can collect, what the collection statute is. And now we're talking about the refund statute, right? The latest date you can claim a credit is one of the two of these dates. The 3-year rule, which is 3 years from the date you filed your federal income tax. We're going to use, for example, we just filed taxes April 15th, 2026. We got 3 days, 3 years, right, to claim the refund on that. So let's say you filed an extension. Let me let you see my face so we got it. Let's say you filed an extension and you're supposed to get a refund. You actually have until April 15th, 2029 to claim that 2025 refund. Make it make sense. Make it make sense. Patrice, you said 26, 29, 25. What kind of math is that? All right, so that's the 3-year rule. The 2025 tax return was due April 15th, 2026. Let's say you got a refund. You filed an extension. Life get to life. And oh snap, I got to get my refund. You have until April 15th, 2029 to get that 2025 refund. That's what that 3-year rule means. Or you got a 2-year rule, which is 2 years from the date you paid said tax. I'm going to use still the 2025 return because it's the freshest one in my mind, right? Let's say you filed an extension and you paid $2,000 on April 15th, 2026 for that 2025 extension. But then when you've got the tax return completed, because you paid that tax on that date, you actually, from the tax that's due, maybe you didn't, maybe it was a payment due, maybe it wasn't. You got 2 years until you paid that tax due. So that would be 2 years from 2026 would be April 15, 2028 to go get that money. But remember what I said. It's whichever is later of these two dates. That April 15th date probably wasn't the best one for the second one, but you get what I'm saying. It's the later of the two. If you filed your tax return before the due date, So we filed a tax return on March 10th. The IRS considers it to be filed on April the 15th. Okay? Now, withheld income tax or estimated tax payments and or extension payments, and don't say that, are also considered made on the return due date. A lot of y'all, we got them extensions done. How much credit or refund can you receive? Well, it depends on when you filed when you filed a return. If you file within 3 years, your refund or credit is limited to the amount you paid during the 3 years before you filed the claim, plus any extensions. If you filed after 2 years from payment, so remember our 3-year was late. That's our first one, our 3-year rule, right? You do a refund. What's going on? Filed after 2 years from payment. That's our 2-year rule. It's limited to the amount you paid within the 2 years. So one is maybe it's the whole refund, right? But that claim to get back, hey, you know what? I overpaid too much. I need to get that back. That's 2 years. If you filed after both deadlines, you cannot get a credit. You cannot. That's stress. And I know it's cut off. You cannot get a credit or a refund if you miss both that 3-year rule and the 2-year rule. Unless, because everything always got an exception. Unless you qualify for an exception. What are the exceptions? You in a combat zone. I'm not going to speak on it. I'm going to just be quiet. You in a disaster area. All right. Or in some cases, because I do have some clients where DHS currently right now got some extra time to file a tax return. Okay. So let's say, because DHS, they got more time because, they was caught up in being used as a pawn. And in some cases, they got some documentation even on tax day that said, hey, some of your numbers are adjusted. Here's your revised W-2. Okay. So they got a little bit more time. If you got a written IRS agreement to extend the assessment, it's normally a 6-month extension, right? Think about, because that's what you got normally for an extension anyway, 6 months, 6 additional months. Bad debt or worthless security. For a bad debt deduction or worthless security loss, you have 7 years from the return date for the year to file the claim. Now, if you got I'm going to go back to this potentially declared disaster area, because this should make sense. That one additional year, if you go back to when we started, how we got to this statute series, if you go back to the Quan case and what they were talking about, this is what they were talking about. Because COVID was a disaster. And it didn't officially end until, right? The dates they gave us. I can't remember the dates off the top of my head. I'm doing good. My brain capacity ain't 100%, but I'm doing good. And so that's why some of those statutes were good and some of the statutes were not, for to claim the refund and get an adjustment. That was the whole premise of this. This is why, and these are the rules they use. Each one, okay, when was it assessed? How long did they have to collect? When could you claim your credit when can you claim a refund for your credit or the refund you were actually due? Boom, they're using that. And Quan's case actually fell into this exception scenario. All right. Hopefully that makes sense. How to file a claim. You either going to file an original return, right? Not just for the 1040. Now, I'm going to say for the 1120 plain, right? But the truth of the matter is you may also have to adjust your 1120S or your 1065, your pass-through entity tax returns, because it will have an impact to what shows up on the K1 that ends up on the 1040. So just because we gave the example of the 1040 doesn't mean that there may be some adjustments that have to be made on other returns, because I've done this with a qualified business income deduction where I had to go fix the business return, go check a box on the business return, the pass-through entity, so that it could show up when I made the adjustment on the personal return. or an amended return on a 1040X. You have to send amended returns to the service center where the original return was filed. In most cases, that's Kansas City. But the beautiful thing is, y'all can see me. In most cases, what can happen now is I can electronically file. It probably happened like 2 years ago. We can electronically file 1040Xs. Back in the day, we had to mail them bad boys. Now, if it's a return that's not like current, because we got 3 years to electronically file. If it's outside of that window, currently we're filing 25, 24, 23. So 2022, which had a deadline that was happening, right? We had to mail those in, and we would mail them to the service center. Where I am, most of my clients, Kansas City is that service center. But in a lot of cases now, I can electronically file that 1040X and have filed electronically 1040Xs for clients. Y'all see it say that right there. It can be electronically filed for the current and prior 2 years, right? Up to 3 amended years prior. Other tax penalties for credits or refunds on taxes. For penalties, we're going to file a form 843, claim for refund and request for abatement. That's my penalty abatement form. Right? Sometimes I can just do a letter and explain it if I'm doing a penalty abatement case. Sometimes we got to actually fill out the form. I won't lie to you. This form 843 take longer than when we doing the 1040X in a lot of cases. But that don't mean don't go ask for your credit. It may take a while for it to get processed. That don't mean don't ask for it. We always, to this day, I know we always got to ask via mail for that form 843 in most cases, right? This is it at a glance. The 2 years we care about, my 2-year payment, 2 years from payment, and 3 years from filing. These are my exceptions. 6 months after the extension, 7 years for bad debt. Always ask for the claim, the refund as early as we know. Missing that statute, this collection statute, mean in most cases, they ain't gonna give us the money. I'm gonna say in most cases. And the reason why I'm gonna tell you in most cases, and this is at both the federal and the state level, because there's some times where I've missed the statute and my clients has still been made whole. Praise God, praise Jehovah, hallelujah, hallelujah, that it worked out, that they ended up getting that money, or that a refund was loosed out of the hands of the tax authority and applied to an outstanding debt. I love it when we can do that. I love it when we got something to be like, oh, let's loose that and apply it elsewhere. Because I don't ever want to see them have the money just because we sat on it, our hands too long. You don't ever want them to do that. And I don't ever want to see them in a substitute for return when it's wrong, when you could actually be paying less tax. But if you got some money due, baby, I'm here to make sure we doing what we can to do the money due. And even if you have somewhere you have an underpayment penalty, I'm going to always look to see if we can get some of that. Can we get an abatement? I'm going to look for it. I'm going to look for the opportunities to see what we can do. Okay? Here's the resources where this information happens to be. We pull this off of directly, create this presentation directly from the IRS website. If you want to know what sections of the Internal Revenue Code talk about this even more, we'll make sure we give you a copy of the slides so you have access to it. Let us know if this series of statutes, y'all not even looking. I switched this thing and I'm talking. Here, let me do. Here it is, right? Boom. Here's the resources, right? So now y'all got the resources, quick pick if you want to do a screenshot. But I'll make sure that you get access to this information as well. If you want the slides that were used in each one of the presentations, we can get you those as well. Be familiar. 3 statutes that you have to be prepared for and you have to be aware of. Assessment, when they can assess tax. Collection statute, y'all, that's the collection statute. I'd be like, how much time left on the clock? Right? And number 3, the RSED. How much time do you still got left to be able to claim for a refund or get a credit? You need to know that. So we got an ASED, a CSED, and RSED. CSED as an EA, I'm hunting down. ASED, she gonna come second because I gotta be like, what's going on? RSED is the most important to you as the taxpayer. You need to know this. You need to know, hey, yep, I gotta go back. We need to make an adjustment. Let me go get my money. And let me go adjust it so it can be applied to the right location so we can get this thing cleared up. Because I don't want the IRS snatching my stuff. I don't want the state snatching my stuff when they could be actually applying it elsewhere. And even when you get it resolved, I'm going to tell you this, they could apply it to an outstanding balance. And them applying it to an outstanding balance don't have to be a bad thing, because that's less that you actually gonna have to incur interest and penalties on while we knocking that amount down. All right? Let me know if this series was helpful. Let me know if it intrigued you to having more questions. Let me know if you're now like, Patrice, I think I need to go back and find out what my CSED is or my RSED is, or even my ASED in some cases. If we could be of any assistance, we are glad to be able to help you. Because what? We always want to know if we're helpful, but we want the opportunity to help us, help you, help yourself. Till next week, real estate. I got this stuff ready to roll so we can talk about what passive activities look like, how you do stuff with real estate. We back, baby. Now, I may not be on the podcast this Friday. My goal is to start again live next Friday, just because I'm finishing what's up on my desk. Let me go get back to reviewing these tax returns. Peace out.